Hi everyone, welcome back to the Be Rich podcast. Happy Saturday morning, and I hope you're feeling well and you've been enjoying your Diwali holidays. And I'm sure a lot of revelry happened in those holidays and a lot of Muhurat trading for those of you who do it. And I hope some of you did some Muhurat investing like I spoke in my earlier video. Other than that, I can't think of anything else. Tana must be in his hometown right now, celebrating. I hope he's also recovering well and he's not done anything stupid and he comes back to me in one piece. Right. So what do we have, Dana, on this fine Saturday morning?
Sir, today I come with the IDFC First Bank, sir. IDFC First Bank share was more corrected and we feel very nervous about the price. So leave that part away and then I come with that was one part. So,
I think the viewers would be most astonished that the most important thing, you kicked the can off and we said, forget that, sir. The most important news, forget that.
So that was not my problem.
Oh, wonderful. I think your comments, your fans below are not going to be your fans anymore. Dana. They're going to be like, Dana, what's wrong with you? That's the most important.
The correction was happened, then bravely enter into the company. For that purpose,
bravely consider the company. So we are not SEBI registered advisors, so please don't assume that we are giving you advice of any sort. Dana is considering it very strongly.
So why? The reason will come.
Right.
For that I come with this bank history.
Very
overall history.
Right. This I like. This is a true value investing strategy.
Okay, sir. So this is also mentioned in their own website.
Okay.
So you can also
check
it
not some secret information he's got from Vaidyanathan, who is his best friend. This is public information available on their website.
In 1997, the IDFC incorporated, sir. Not the IDFC First Bank or IDFC Capital, not anymore. IDFC. Just one company was incorporated in Chennai.
Wow. So the Chennai company, man.
It's a Chennai company. This was also
must be feeling proud.
Proud.
Yes. Down the road it happened. So, what if they told you back then, when you were in your diapers? You have definitely put few rupees into that. Chalo.
Only for the purpose of focus on the infrastructure project loan amounts. So for that purpose, they are only incorporated. In 2003, IDFC raises 893 crores in the India's first infrastructure dedicated growth equity fund. So on the first time, they are raised the 893 crores in 2003. And then 2005, they are listed in the NSE and BSE. So went for the public. 2006, they are raised around 2,000 crore. In 2008, the IDFC raises $700 million in a second equity fund and $930 million in a new asset class to recycle their equity into the infrastructure project. They accused the Standard Chartered Bank AMC business also and then set up an office in Singapore also. In 2009, IDFC becomes a part of the Nifty 50 in 2009.
2009, okay.
And then IDFC recognized as a top 5 lead arranger for the project finance loans. So it was top ranked in the top 5.
Okay.
And then in 2010, IDFC Investment Bank ranked as second in the equity league. The tables was driven by the Bloomberg. From the Bloomberg article, it was ranked at second place. And IDFC ranked among the top 50 companies in the India S&P and ESG index. So and then IDFC was done one program, sir. That was very interesting. That was National PP Capacity Building Program. IDFC trained the 10,000 government officials. So it was something interesting. And then 2011, IDFC Mutual Fund was ranked at the 10th place. And then many of them are happened. In 2013 only, IDFC went to the RBI for the license for the commercial bank. And then 2014, RBI was approved. Then it was comes under the IDFC Bank. So now 3 questions, sir. Like IDFC Limited was incorporated for the infrastructure project. IDFC Bank. So IDFC Bank was come after the 2014, after the RBI was issued the license. And then here the Vaidyanathan parties come. So Vaidyanathan was in the 2002-2009, he was at the MD and CEO of ICICI Prudential Life Insurance Company. And then the Capital First, he was newly created. So now that was merged into the
Capital First.
Capital First was created. Now it was coming into the IDFC Limited. So the IDFC Limited was merged into the IDFC
Capital
Bank and then IDFC Capital. All these 3 are combined and then into the
IDFC First Bank.
So completely different.
So it's nice. So you got a nice track record of 3 different rivers joining together and become like the Ganges, right? So it's a fantastic story. And now, as a value investor, you've seen the complete history and you've seen the guy running it and his history. So I understand why you're not feeling nervous. Now, how will you convince your audience who are watching you that they should not be nervous when they have seen 100 rupees IDFC becoming almost 59 rupees? Why they should not be worried?
The price was around 59 to 60. it was not a single company. First of all, my point of view, because it was a IDFC Limited, it was a biggest infrastructure project loan company. First thing. And the second thing is IDFC Capital was run by another. Now he was taking control of all over the IDFC Limited, IDFC Bank, IDFC Capital. So it was not a price. So its market cap was very huge. So that's my opinion.
I do agree, because what investors are failing to see is it is not IDFC Bank which was at 100 rupees and has collapsed. Now it's become even bigger because IDFC and IDFC Bank have merged, and Capital One, all of them together. So the complete asset class you should look at as a whole. And looking at it as a whole, it is a lot of value there, and all that value is going to get unlocked as for investors. But then why did this price correction happen? What led to this?
Many of the investors are not unlocked their value.
No, the reason is not because of that. The results came out. You saw the results? I have it open here. Their profit has come down. Quarter 2 profit has come down by 73%. That is a huge percentage. Imagine your 100 rupees has become 25 rupees. It's like that. That is why it's come down. So why has it come down? If you read the article, the main reason it seems to have come down is their profit has not come down. The net income has gone up. Net interest income has gone up. Things are looking good. But as with Manappuram, as with other microfinance companies which are struggling and suffering, there is a microfinance loan within IDFC First Bank. And some of these loans might become NPAs. So they've decided as a prudent provision, meaning let's be careful and assume some of these loans are going to go bad, and they've taken some money and they've kept it aside for that, which is around 315 crores. Then they have a Maharashtra-based toll account. They think that is also going to go kaput. So they've kept 253 crores aside for that. So total of 568 crores has been kept as prudent provision. That has impacted their earnings. And that is what the reason for this squeeze is. But if you see their customer deposit, it's up 32%, which should make you happy as an investor. So they're growing. That too, outside Indian customers are also growing. NRI base is growing. So, like you rightly said, this, whatever is happening to them is a short-term pain. And RBI gave Manappuram a slap on its wrist like that. They have not got any slap on their wrist. They're being prudent. They're being good bankers. And they're being very open and transparent. So as an investor, you should feel happy that they're being transparent. So all the selling which you're seeing, the pressure is probably from the FIIs. One, they're taking money out to run to China. We have to see what is the FII holding in IDFC. Let's just see that. Let's scroll all the way down. Share pattern holding of IDFC. FII were increasing. They've actually increased from September 2024 from 19.5%. In October 2024, the FIIs are sitting at 27.3%, right? Which is huge. So that is giving a vote of confidence. Even the FIIs are investing in this, though they're selling everything else, they seem to be thinking this is a good bet. So even the DIIs are buying. The government of India has been buying. So you should have more faith in this. If you see an opportunity, then you should cash in. Maybe the FIIs have been buying this entire month, and maybe these last few days of correction you have seen could be them exiting in because they see the earnings are going to be impacted. And for FIIs, 1 year quarter earnings and 1 year earnings are very important. For long-term investors like you and me, we don't worry, right? We look at it in the long term. So you're absolutely right in your assessment of IDFC. I give you 100 marks for that. And as far as pricing is concerned, historically, its price to book has been in the last, 5 years, let's say. 5 years has been 1.6 because now the bank has grown. So you have to look at it differently. 1.6. So even at this current, it's still undervalued at 1.48. So I would say IDFC is interesting to keep an eye on. So tomorrow, I think you'll come with something further analysis. Since we're talking about banks, Dhana's going to hit you guys with another interesting proposition on Sunday morning. So be ready. So as you're enjoying your Saturday or recovering from Saturdays of the long weekend of holidays, when you tune in tomorrow, Dhana's going to have a further interesting value proposition for you guys, which we will dive into and compare and contrast with IDFC and leave you wondering what you should do. Thanks for watching the video and the podcast as always. Do catch Dhana on Instagram on his handle and do chase him with your questions and he'll try to get them answered or bring them to me. And if I fail to, I'll take them to my brother. Definitely, we will try to get you some answers out there. Thanks for watching the podcast and see you tomorrow with another one.
Thank you.